Sorry. Dear students and working accountants, welcome to my Export Alley Prime YouTube channel. My name is Babu Rao. Today in this topic, in this video, we are going to discuss about the part 2 of the composition dealer accounting. That is accounting entries in the books of a composition dealer. So before entering into the topic, so a request to you, everyone visiting my channel and watching my videos, please don't forget to subscribe to my channel and also click the bell icon next to the subscribe button and select all so that you will get notification for all the videos which I upload in my channel. And also share my channel with all others. And then another very important thing is, everyone please watch every video till the end. If you skip in the middle, you will know and you will understand the topic up to that point only. The balanced topic or subject you will not understand and you will not know. It will be like half knowledge. So it is nothing but waste of time. So nothing but waste of time, no use of that. That is why watch every video till the end, and also if necessary watch more than once. Then you will get a good knowledge, and also you work out or you practice the examples, or you take some more example also. The examples are illustrations given in the video, and you can take some more examples also, and you practice them in the tally more number of times. If you practice more and more number of times, you will get expert knowledge. And after watching fully, if the video is good, please like the video so that the YouTube people will share this video to many people. Many people will come to this topic and they will see the video and they will know this, they will learn the topic. And then now we will enter into our topic. See here, I am sharing the screen. So in the last video, we discussed everything about the all the regulations and all the rules and all everything about the composition dealers. And now that is in the first part. In the second part, now we are going to learn how to maintain the books of account. That is how this composition dealer accounting is made in the books of the composition dealer. That is accounting entries in the books of the composition dealer. In the institutes also, many institutes, they will discuss about these rules only theory part and how to maintain the books of account. That most of the people, they won't take up this topic because they won't show the accounting treatment because they don't know about this. Many people like that. Very few people will teach this. Okay. Now, how the accounting entries are made means, first of all, we will create a company. So creating the company and is the same as other companies also. So there is no difference. And then GST will be applicable. That is going to the F11 features. We will enable the required features in the GST feature. We will enable the GST feature and we will enable the tax details. In the tax details, GST details, so we will select the type. Everything will be the same. Everything will be same. But in this case, we will enable the registration type. We will select as composition. Previously, we used to select regular. But now in the tax registration type, we select the composition. The other composition option we will select. And after that, there is a new option, the rate of tax to be paid. That I told you, in the case of trade and manufacture, the percentage is 1% on taxable goods only. So there will give percentage 1 and the type of calculation on say that is, they show it as actually it is taxable goods. They show it as taxable value. They give it is actually taxable goods. That we will do. And then party ledger we will create, and then GST ledger we will create. In the GST ledger, we have to make some settings. So we will create the GST ledger not as duties and taxes because the GST paid for purchases, so that will be entered, but we will not get the input tax credit. So that is to be added to the purchase value. For that, when we are creating the GST ledgers, we have to make some proper setting so that will be not as duties and taxes. We will create under indirect taxes, and we have to make the setting as that is to be added to the purchase price. That means the purchase value will show, the total invoice will be shown as the purchase price, and in the GST ledgers, no amount will be shown. So that is to be done in the what you call proper settings to be done in the GST ledger. GST and purchase will be added to the purchase price only. These GHG ledgers are also useful. So we are creating these same ledgers are useful at the end at the end of the month when you sell the goods. On the sales, you have to pay the tax to the government directly from our pocket 1%. That's called as composition tax also. So while paying that, so we can use the same ledgers. We will pay tax will not be calculated. The purchase it will be calculated added to the purchase, but in the sales it will because since the dealer is a composition dealer, so tax is not calculated. So tax is not calculated. Which one? This tax is not calculated, but in this case, this composition tax will be shown. What is the composition tax? 1% will be shown. We are not calculating, but it will show in the report what is the tax payable at the 1% on the report. So that 1% tax we have to pay, and it is stated as indirect taxes. So when you pay that, so tax will not be calculated. So it will not go on the duties and taxes. But when you pay this one, this is as indirect expense in the profit and loss account. It will show like that. And then this is the settings you have to make. Then stock ledgers. We will create the stock ledgers. Create everything is normal. Only GST ledger and F11 features. We have to make some settings. We have to be careful. And GST ledgers you have to create in that way. And that's all. And then we will rate in the goods. We'll give the everything. We have to set up the SSN code, rate setup, everything we have to give. Okay. And then we have to make the entries for purchasing from registered dealer, unregistered or compositor. Interstate, we will purchase from registered dealers only. There is GST will be there. So that is to be added to the registered dealer, purchase price. That is the setting we made. And from unregistered dealer and composition dealer, from other states, we cannot purchase. Okay, no unregistered dealer, no composition. They can sell to other states. So we cannot purchase from other state, but within our state, we can purchase from these two also. So, but there will be no tax. So there will be no purchase tax. Registered, there will be tax that will be entered, that is added to the purchase price. But in this case, only the taxable value they will take, and that amount will be the purchase price only. There will be no tax will be. And then this is from purchases, and then sales entries you have to make. For selling, we can sell to anyone, including consumer. Purchasing, we cannot get purchase from consumers. Okay, but when you are selling, all types of regular, composition, unregistered, and then consumer, to anyone you can sell, and we can sell in any state. We can sell. Sorry. We can sell only in the for selling. For purchasing, we can purchase from anywhere, but in the case of sale, we have to sell only within the state, and there is no tax collected. But without, even though you are not collecting, that 1% is shown in the report. That 1% we have to pay. We have to check up the report, and then we have to file the CMP 08 in the next month. This is filed quarterly. So after completing the quarter, the next month before 18th, we have to before 18th CMP 08 is to be filed. So at that time of filing, first we have to pay the composition tax, which is 1%. That is to be paid, and then that is to be paid. So we are paying that. That's 1% that is paid, and CMP 08 is filed. Okay, so that we have to take up. This is the thing. For that, I will take up a problem. There are two problems. First problem I will do, and second problem I will show you. Both are same, but with more examples, more transaction. That's all. We have to try. If you try many number of times, both this also I am showing this, but still this also, if you try, you will get good knowledge. Okay. So first of all, you will take up. So here, this is April, May, June. April, May, June. This is the second problem. That is quarter. Here also, this is a different company. Here also April to June, some different, some random dates. That is, we will give 1st April, one transaction, two transactions in April, two transactions in May, and two transactions in June. Okay. So here, first of all, so here, company name is Sunny Electronics, Hyderabad. This is the number. He is a composition dealer. Okay. Now we will go to see here. Here, I already created Sunny Electronics. Okay, Hyderabad. So go and see to the company menu alert. You can see Sunny Electronics. Within brackets, I give composition and everything I did. Okay. Creation of the party is the same. Okay. After creating this, if you newly created, directly we will go to company features. Since I already created, we have to go to the features by pressing F11. So you're going, so everything, maintain accounts, inventory, whether inventory is there or services, anything, bill wise entries is required. And then we are purchasing goods. Okay, then purchasing and selling goods. So as a composition dealer. So I am a small businessman. So inventory and integrate inventory with accounting, both we have to make. Yes. Then here, in the case of taxation, enable goods and services tax. This is also everything will be same. See here, it will take the state, and here by default it will be regular. By default it will be regular. So we have to select composition. You the then other territory no. Then you the number. Number will look same, both numbers will be same, both are registered, they will have the same number, because sometimes the same composition dealer can convert into regular dealer. Some regular dealers also can convert into composition dealer. That is it, number will be the same for both. Okay, similar. And then Telangana, this is place of supply for inwards. For purchasing, what is the place of supply? Our place is the place of supply. For sales, the other party, the supply, I mean, what you call the customer, we are selling means the customer's place of state is the place of supply. For inwards means purchasing, our state is the place of supply. Okay. And then GST details, this is for filing, that's not required. And here, this is extra. This is additional for the composition dealer. Tax rate details for turnover. So here, the tax rate for the turnover, taxable turnover, what is that? 1% for trader and manufacturer. And restaurant, for restaurant, not serving liquor, 5%, separate service provider, 6%. In the case of this trader and manufacturer, same. But other two, total tax, not taxable value on the total turnover. Here, trader and manufacturer, only taxable, actually taxable goods or taxable turnover, not taxable exempt, and that is for the other two. Okay, so select this, and e-way bill is required. E-invoice is not applicable to the composition dealer. Okay, because in any previous year, if the turnover crosses 5 crores, then only e-invoice applicable. But 5 crores means this limit itself is 1.5 crore to the composition dealer. That is why e-invoice is not applicable. And e-way bill, if they are sending the goods more than 50,000, more than 50,000, we have to issue that one present. We are making no and accept. Okay. So this is done, and then accept the features completed. And then what to do? This is all done. Okay, this is all done now. Now we have to create the ledgers. The ledgers creation means here applicable to everything. Then party ledger and other ledgers, you have to create GST ledgers. So I'm creating party ledgers. And one thing we can do at the time of the entry, we can see how to create that. So we'll go to the problem. So the company is created and the number is given. The number is the same number I have given in this one. We can copy this. This is the number I have given. Okay, accepted. Okay, that's over. Then I will take up 1st April. 1st April, I'm taking up first entries we are making. All others we will see in the entries. So this is purchase or sale of goods. So we have to use only item invoice. Okay, this is, so I will take up 1st April. Next, another transaction, sorry, not 21st. It is 1st April only. 1st April, another transaction 2nd April. Again 1st May, 2nd May, 1st June, 2nd June, like that. Okay, we are taking that. And here, purchasing from whom we are purchasing, data status, everything same, the creation of the ledgers. Purchased 10 electrical cookers, this is the number, 7,000 each at 18% tax from Raman Stores, Hyderabad. Number is there, means registered. Hyderabad, registered means Hyderabad, registered. This is called regular. If it is composition, they will mention. Okay, so now purchasing, and here we have to create this one, Raman Stores. See, I already created Raman Stores. How to create? This is the same here. So Sunday creditors, bill wise details, this address, everything given. It's called regular dealer, and this number I copied. Okay, this number I copied and accepted. So created, accept, party details, accept. Now we are purchasing the goods. That is why create purchase account. So purchase account is normal. So everything purchase accounts and applicable. GST is applicable, but details are not given. The details will be given in the stock items. And at the end, by default, it will be service. This is goods, trading goods. Fixed assets means capital goods. Trading goods, we have to select goods, accept. So now what are you purchasing? You are purchasing 10 numbers electric cookers with this HSN code. So electrical cookers, see here, electrical cookers I created. So going back, how I create? So electrical cookers, we can give electronics. We can give, so unit cell numbers, see here, 10 numbers. So numbers I created the numbers. That is the simple unit. And then these two are not required. And here taxability is taxable. And you have to specify this one. Number is 258258. So specify details here. What to do? Here. Specify details here. It will be as per company. Select specify details here 258258. Here also it will be as per company. So sell the specified details here. It is taxable at 18%. So taxable rate is 18%. It is goods automatically. So this is created. And how many units you are purchasing? 10 numbers you are purchasing, and each one is 7,500. Each one is 7,500, 75,000. Okay. He is also, see here, in the same state, Telangana. Our company is also in, sorry, our company is also in Telangana. See, both the supplier and the buyer. So our company is also in Telangana. That is why after the goods are entered, only one item. So that's a, and below that now I had to put, we have to calculate the tax. So yes, same state, CGST, so 6,750, SGST 6,750, total amount is 88,600. 88,600 rupees is the amount. Here you see, we made the settings. We have to make the settings. Here, electric cookers, it is okay. And then in this case, what are the settings to be made? What to do? Here we are calculating the tax, but this is a purchase tax. So purchases, tax on purchases. So that tax we calculated. So we are paying to the seller, but we will not get back the ITC. That is why this is not duties and taxes. Duties and taxes means collecting, paying to government, and adjusting the tax paid on purchases. So in such case, the GST is called duties and taxes. But here, this is not duties and tax because we are getting back. That is why these are to be created as indirect expense. We are paying back. We are paying to them, but we are not getting back. That means it is expense to us. That is why it is added to the purchases. So purchase is expense. So we are adding to the purchases, and we can take it as indirect expense. But here, what we have to do is we have to make a setting. So this is to be the GGST and SGST is to be calculated. CGST and SGST is to be calculated, but it is to be added. It is to be calculated. Okay, separately, but it is to be calculated, but it is to be added to the purchase price. What is adding means appropriation of the tax to the appropriating the tax to the purchase value. So for that, here we have to make a setting. In two ways you can make. Only one actually. See here. Here we have to take. Here, go to all more details. Go to more details. You click there, or control I click here. See, behave. This one is indirect taxes we are creating, but this is a tax one. So it has to behave like duties and tax, but it's not duties and tax. So here, behave as duties and taxes later. If it is no, we have to make it yes. Okay. So again, it come here, same, it will come behave as duties and taxes. So first of all, we have to give yes. And what is this tax? This is GST only, and type of tax is the GST duty, and type of tax type is CGST. And then here it will be actually, it will be in a, control A. So here, if you can take this, you will get the same sheet, but you can take this also. So method of appropriation. In this case also, we will get the same window. Here heading will be method of appropriation, but here if you take, the heading will be, behave as duties and taxes. If you take this is enough. If you take one is enough. So this is completed. And here, this is, it will show CGST and HGST, it will calculate the tax. But it is to be added to the purchase. This is for calculation. This is for calculation. It is to be added to the purchase price. For that price, method of appropriation of to allocate the additional expenses. This is, we are adding to the purchase additional expense, additional cost in purchase voucher. That is why if you click the space bar, it will show window. So here not applicable, and it will show not applicable. Now we have to select as appropriate the tax to the purchase. Take appropriation by tax, and then this is only CGST tax type, CGST, and then here Tax type is CGST. Okay, no problem. It is enough. Tax type, or we can do this one also. F12. If you go and take this, this is here. Select type of duties and taxes. Yes, if you take here. Here, see, duties, type of duty is no. This F12, if this is also, it's better to take. Or you can take in this also. Control I. Also, here, you can get this. Type of duty is GST and tax type is CGST, and this is the thing. So in this also, it will show. So tax type is GST and the duty is GST and tax type is CGST. Accepted, and it is accepted. Same thing here also we have to do separately. In this case also, so indirect expenses it is created. Control I if you take, and here come down to the behave like in duties and taxes. So you make S, and the tax type is GST, and this is SGST, and here also it will be not applicable. We have to click the space bar, and in this select appropriation by tax. So this is also appropriating, that is adding to the budget. And now completed. You see here. Here if you see, if you go to Alt A and Alt F1, it is showing the tax and everything it is showing. Okay, it is showing the tax. Okay, it is showing, but it will not add to the, it will not add to the purchase. It will not add to the duties and taxes. It will add to the purchase price. Okay, and then new reference and everything. Okay, here. So now done. See here what actually what in the case of normal traders, that is regular dealers, purchase account will be debited, party account will be credited with the total amount you have to pay. But purchase account will be debited with the purchase price only, that is with only taxable value, and the taxes will be debited with GST. These two, isn't it? Now here, these two will not show any amount. They are may not be debited. That is also added to the this one. And purchase account, purchase ledger will show the total amount. Actually, it will show this only. This is separately. Now this is not showing separately. Total amount is shown here. Okay, I will go. So how it will show? So in the case of duties and taxes, if you go to balance sheet, you see control F1, see Sunday creditors total amount is showing. Sunday creditors will show up. Sunday creditors will show that is Sunday creditor account will be credited with the total amount. That's okay, no problem. But if the tax is taken as duties and taxes, so here in the country, the current liabilities, so duties and taxes will be shown. Here duties and taxes is not shown. Okay, and if you go to profit and loss account, you see CGST, HGST is created under as under indirect expenses, but there is no amount. That amount is added to the purchase price as 88,600. This is added to purchase price. If you go to ledger also, DAL, if you take CGST, no amount is added, no amount is shown. CGST also, it is to be debited, amount is shown, and go to the purchases, total amount is shown in the purchases, not only creditor account, that party account, total amount will be shown. This also total amount will be showing. And the person is, who is that person we purchased from? We purchased from Ramana stores. So Ramana stores also total amount is shown. So this is about peculiarity in this case. Okay. So this is the thing, everything we do. And you are purchasing, this we will do this one for every purchase. And you are selling, so we'll make them sell entry, but tax will not be calculated. Okay. Now we'll go to the next entry. We'll go to the next entry. So now we will take up 2nd April. Sorry. We will take up 2nd April for this. We'll take up 2nd April. And what is the second one? Second one we'll take up. We purchased from, he's a regular dealer. Purchased Sony TVs from Radhika Enterprises. Radhika Enterprises. This is 36 Hyderabad, Telangana, but it is composition dealer. So if you purchase from composition dealer, there will be no tax. Here is a regular dealer, tax is there, it is added to purchase price. Here composition dealer we are purchasing from, so there will be no tax, tax will not be calculated, so there will be no question of adding. Okay, second one, I will give some number, 2nd April, the name is Radhika Enterprises. Radhika Enterprises, accept, the Radhika Enterprise composition dealer, accept, purchases, what you purchased, we purchased Sony TV 30 inches, so calculate this, and this is also everything is the same, so 18%, calculate this one, and we purchased 5 numbers Sony TVs, and each one, and for this we have given the, here for this we created like this. This is 1 2 3 4 5 6 Sony TV. Previous it is a cooker, HSN is different. This is Sony TV. It is different. And purchase 5 numbers. And what is the amount of each one? 30,000. 30,000 we purchased, total 150. And here, after this, so this is the party is composition dealer. He cannot collect tax. So here, if you take CGST, the previous case, tax is collected is a regular dealer. Here, unregistered dealer or composition dealer, they cannot collect tax. So tax is not calculating. Only the actual purchase price itself is the purchase price. No additional extra amount. Okay, this is over. And then we will take up May. Then next one we will take sold. This is two purchases. Then we are making sale. So we are making sale on 1st May. So two entries in April. We'll make two entries in May. So take sales. So sales 1st May. See here sold 30 Sony TV 2 numbers to Symphony Electronics unregistered. When you are selling, you can tell to anyone. You can sell to anyone. In the normal case, we will collect tax from everyone you can sell. We have to collect tax from everyone. But in this case, we can sell to everyone. We can sell to everyone in our state. In that other case, normal case, that is regular dealer, we can sell to anyone in any state. We have to collect tax. But in this case, composition dealer, we can sell to anyone, but in our state only. So Symphony Electronics we sold. So party name will take up Symphony Electronics C. Symphony Electronics, here is saying, is unregistered. Telangana only, unregistered dealer. We can sell to Telangana only. Sales ledger, the sales ledger also the same thing. Okay, creation is same. Sales ledger, and what we sold 2 numbers Sony the TVs. So Sony TVs. So the total purchased numbers will be shown here, and here I'll put it here. So number is shown. Sony TV we are selling how many numbers? Two. Sorry. Here 2 numbers we are selling. So two numbers we sold. And what is the price? See, we added the amount also, the tax also to the purchase price. We had to sell above the purchase price. 30,000 Sony TV. No, 30,000 plus 18%. That is total will be 35,400. We have to sell including profit at a higher price. How we sold? So in the problem given, we sold for 40,000. So at a higher price. So for the actual purchase price including tax is 35,400, but we sold for 40,000 each. 40,000. And okay, only one item after this. Now we are selling. When you are purchasing, we are calculating tax. It is adding to purchases. But here in the case of sale, some compositor cannot collect the tax. That is why it will not calculate. So CG. In the case of sale, there will be only CGST or IGST. CGST and SGST, because you can sell only in our state. We cannot sell to other states, so there will be no IGST. When you are purchasing, there may be CGST and SGST or IGST also. See, tax is not calculated, and this is the bill-wise details, 80,000. So tax is not included. Okay, and now, but if you see before that, if you go and see this one, what you call stock summary. So this is showing 10 numbers we purchased, still in stock. Here we purchased 5 numbers and sold 2 numbers. The balance is stock. Okay, this in the case of profit and loss account. So this is no GST is calculated now, and the purchase price is added to that. Now it is reduced because we made sales 80,000 only. Okay, this is the balance. Okay, now 1st June we completed. Next entry we will take up another one. Next one is 2nd June we will take up. 2nd June. We'll take up 2nd June. On that, this is the 4th one. This one we are purchasing. So purchase entry is on it. And in the here, when you are selling, tax is not collected. So under taxable goods, you have to pay 1% to government. But taxable goods or non-taxable goods, we will not collect tax anywhere. But when you are purchasing, I told you, regular dealer, we have to purchase. When we purchase from regular dealer, we will pay tax to him. Others, we cannot pay. We don't have tax. But this is only for taxable goods. Even from regular dealer we purchase, if tax will be calculated only if it is taxable goods. If it is non-taxable goods, nil rates are exempted, or non-GST goods. So tax will not be calculated. So we are purchasing here. Number I will give you 1250 for example. 1250, 2nd May. So the party name is here purchased. Here we are purchasing rice and salt. So both are, the rice is exempt, salt is nil rated. So in this case, tax will not be calculated. Only tax will not be calculated. So just like unregistered dealer and composition dealer, when you are purchasing, there will be no tax for anyone. But here it's similar to that. Exempt or there will be no tax, it will not be calculated. So I are purchasing from whom? Purchasing from Sidhu Rice Stores. So Sidhu Rice Stores, Sidhu Rice Stores is an unregistered person. Even if it is registered person, we cannot collect, we will not pay any tax because it is an exempted goods. There will be no tax, so I select exempted. And purchases the same thing, purchases, and then what you purchased, rice purchased 100 kgs at 75. So rice purchased, for the rice, how you calculate, you said that, how you created, everything is same, number, everything, but here rate of tax, that is the taxability type is exempt. We have to select, it is exempt. Select, if you select exempt, this rate will be disabled. So directly, the same thing for nil rated also, I'll tell you. The same thing for nil rated. So here, rice we purchased. How much you purchase? Rice 100 kg at 75 rupees. So 100 kg at 75 rupees, 7,500. There is one more item. Previously one item. Here, second one is salt. So salt, the salt is also created in the same way, but here taxable type is taken nil rated and tax rate will be disabled. Okay, accepted. How much you purchased? This also purchased not Sidhu, Sidhu stores, Sidhu rice stores. So then salt also 100 kgs at 10 rupees. So 100 kgs at 10 rupees we purchased. And here, in the case of regular dealer, if it is regular dealer, so come to below the total. In the case of regular dealer, if you calculate CGST, it will be here. You see, if you calculate CGST, that will be calculated and added to the purchase. But here it will not be calculated. So then a question again. See, because this person is a registered person or regular unregistered person. From unregistered person, we cannot purchase from other state. From our state, we can purchase. He is from our same state. We can purchase, but there will be no tax. So that is why the tax is not calculated and not added to the purchase price. Okay, only the actual taxable value itself is the purchase price. Okay, these two purchased, one is not taxable, both are not taxable, exempted and related. Okay, so second May, 1st May, 2nd May. Okay, so we completed 1st May, 2nd May. Then you will take up June 1st and 2nd we will take up. Then sold, then sales, June 1st you will take up to Subhash Traders. So we are taking sales and 1st June are selling to whom? Subhash Electricals. Subhash Electricals we are selling, and so the Siddhi is completed. So Subhash Electricals is from Hyderabad only. We can sell only to same state, and he is a registered dealer. So here Subhash Electricals, sorry. Subhash Electricals. Subhash Electricals, he is a registered person. Look at regular, same state. Accept sales we made. What we sold electrical cookers 2 numbers at 9,500 rupees. So electrical cookers we have 10 numbers, 2 numbers we have 2 numbers. We are selling for 9,500. How we purchased electrical cookers? 7,500 we purchased. 7,500 plus tax 18%. Example, maybe more or less. So 8,850. Okay, but we sold for 9,500 rupees. So we sold for 9,500 rupees. This is cookers, total 19,000. Only one item we sold, and then come down. So if you calculate CGST, it will not calculate because when you are selling, we cannot calculate the tax. Okay. This is on 1st June. Then we will take up 2nd June. 2nd June also again sales. 2nd June also we purchased here not taxable goods. Here now we are selling on 2nd June. We are selling the non-taxable goods. So sales we are taking. To whom we are selling? We are selling to Ranga Rao. He is a consumer. So we are telling Ranga Rao. See, Ranga Rao, how is created? Is all created here unregistered dealer. Same state, unregistered dealer. We are selling Ranga Rao, unregistered dealer. We are making sales. For same thing, we are selling rice 20 kgs, rice 20 kgs, and no taxable. Whatever the purchase price, the same thing, we increase more. We sell for a higher price. It is 75 rupees. We are selling for 85 rupees. It is in the case of taxable goods. So the 75 plus we will add tax also. Over that we will take some profit and sell. Here there is no tax. So on that we added 10 rupees as a profit. And then salt also. Salt also we sold the same thing. Then salt also we sold. We sold 10 rupees we purchased. We sold for 15 rupees. We sold 25 kg. So salt we sold 25 kg at 25 rupees. So 25 rupees into 20 means 500 and 25 into 25, 625. That is 25, sorry, not 25 kg. It is 25, 15 kg, 15 rupees per kg. So 15 rupees per kg, 325. See here, 25 into 15, 375. So 20 into 85 rupees, it is 1700. So this is non-taxable for sales. It is non-taxable. And after this also, no tax is calculated when you are selling. No problem. In every sale entry, there will be no tax, will not be calculated even if you try. Okay. So this is we completed. So this we completed, Rangarao. So totally we completed. So from April to June. So this CMP 08, that is the written. This is actually called, it is not a return. It is called a statement of turnover, statement of outward supplies. It is only a statement. We'll show the statement, how what is the outward supply, in that what is the taxable goods and what is the tax at 1%. It will show that will be shown in that statement. Then we'll pay the money and we will file the statement. It is only a statement. That's why it's called as CMP 08, not return. But annual return at the end of the year we will file annual return. It is written. That's why it's called GSTR. R means return. GSTR 4. Here it is this what you call CMP 08 is also called as GST CMP 08. It's only GST, not GSTR. GST 08. Now we will go to the reports for purchases. That purchases will come in the purchases and as well as sales liability. Then purchases, everything will come in the annual return here. But we are selling goods, so we have to go to display more reports, then go to statute reports and go to GST reports. We have to file this CMP 08 every quarter. That's why we made entries for quarter. So select CMP 08. You see, so 1st April to 30 June quarterly. In the case of regular scheme, 1st April to 30 April monthly it will show. But here in the case of QRMP, it will go quarterly. But here this is compulsory quarterly return, quarterly filing CMP 08. So it is showing April to June. And here this is the outward supplies. But we sold taxable goods, non-taxable goods, everything we sold. But this is the outward supplies, including exempt supply. Exempt means exempt, nil-rated, everything, including non-taxable goods, total supplies. Okay. Then how do you know we have to pay only tax only on taxable goods? So for the details, return view you have to take, not nature view. It is different. So it is different. You have to show return view. So Alt F5, that is for details, Alt F5 or Alt F1 if you click. So 3.1, 3.2, 3.3. Here it will show, sorry, it will show 3.1, 3.2, 3.3 without details. It is condensed. So if you want to details, Alt F1 or Alt F5. So here 3.1 outward supplies, including this one. Second one is this composition dealer also is liable under RCM, reverse charge mechanism. But here, in the case of reverse charge mechanism, we will pay the liability and we will get back the ITC. But in this case, we cannot get ITC. We cannot get ITC, but you have to pay the liability. But liability will be not like 1%. The RCM liability will be as per the RCM rate. In the case of GTA, 5%. In the case of other services, 18%. We have to pay. If that entries are made, that will be shown here. That I will take up later at a later time. Okay. So in the case of RCM also, so is liable. So for that, you have to make entries, RCM entries. That will be shown here. That is the value of taxable amount and the taxes it will show. Okay, here and here you see here. So taxable sales, it is only 99%. Taxable sales 99,000, and we know 1,750 exempted sales and nil-rated sales 375. Everything. If you go to If you go to sales, if you go to, see here, if you go to profit and loss account, it will show the sales. So 1,05,000, this is total amount. That is total. We require only out of the taxable supplies only. Okay, it is showing. And in the case of that, what you call a non-taxable also added. And here, so go to the display more reports and statutory reports, GST reports, CMP08. This is only outward supplies under normal outward supplies, normal outward supplies at 1% and the taxable sales and non-taxable, no tax is calculated. And also, if there is any reverse charge item, so in the case of reverse charge mechanism, he is liable for reverse charge also. It is inward. Purchasing, on the purchase, we have reverse charge mechanism. It is under section 3, mostly GTA. Okay, that is regular. Okay. And then this is the GSTR 1, not GST, sorry. This is CMP 08. And in it like that, every month, every quarter, we file like this and we pay the amount. What is the amount we pay? What is the amount we pay? What is the amount we pay? We have to pay this one on 1% tax only. CGST, GST, we already created. Purchases, it is adding, calculating and adding. But here it will not calculate, it will not add. We have to pay. So 495. CGST, HGST, we have to make the payment. That when, see, after the quarter, next month, 18th, before 18th. So here, and if you go to see this one, and here also, this one, and you come back here also. So here if you come to other reports, it will show reverse charge only. This is not showing. Okay, and now we will make the payment. We will make the payment F5. When you will make the payment, next 18th of next month. Before that, for example, I will take up. See in your books, the next month means June completed, April, May, June. July 18th is the last date for filing the return and making. Not, you will not get the date 18th. That's why I'm taking 27 only. Actually, we have to take when you file the return. That date we will make the payment also. So now we are making the payment on 2nd June. Okay, 2nd you are making the payment. And here, what to do? We have to pay money for the CGST and HGST. So you can select CGST, HGST. What is the amount? 400 and sorry. What is the amount? Tax amount of tax payable is 495. So 495 each. So 495. So in the payments, we have to get select CGST 495 again debit, HGST again HGST 495 and come down to bank we will pay and that will be 9 because there is no balance to showing a credit. We can do like this. But actually, when you are making the report, the statutory payments, payment under the law, when we are making the payments, we have to make these entries automatic. We have to make them automatic. We have to show why are you paying. What is we are making the payment? We are paying as per law, and we are paying the composition tax. That we have to mention. For that, what we have to do is here. So take this one, and here we have to make it automatic. So here for automatic means it is Control F autofill. Automatic to show every details. Control F autofill. If it is disabled, so I have to make manual entry. We cannot make automatic. If it is Control F autofill is enabled only, we can make. So Control F in our keyboard or click this autofill. See what is the autofill? What is the type of transaction? Statutory payment. Payment as per the statute. Statutory as per the law. We are making the payment. What is the type of tax as per law? Income tax or GST? We are making payment of GST. And what is the type of payment? We are paying the tax either reverse charge or other than reverse charge. Reverse charge is different and all other payments are called other than reverse charge. We are making the payment here, not reverse charge. That is composition tax means tax other than reverse charge. And what is the period? 1st April to 30th June. So you take it here, 1st April to 30 June. But actually it is already there. It will take. Okay, 1st April to 30 June. See here, payment is GST and payment type is tax other than reverse charge. Okay, now you can make, see here. And also here, this another option also will be shown. When you are making payment like this, manual payment, it will not ask you. So here, CGST are making the payment. So 495 So here it will show again. See, it will show all these will be shown if you use the autofill. So tax is payment of tax. So CGST 495. What is the CGST other than reverse charge 495? Okay. Then again debit. Again debit. HGST. HGST also 495. This is also HGST 495. This is also other than reverse charge 495. And we are making payment through bank. So 950. Enter check you are paying or online you can if you take e-funds transfer or check. So if you take check, so for 950, what is the number of check? 1, 2, 3, 4, 5, 6, for example. To 2nd June, you are making the payment and you have to give the details of the payment, details of many other details, not only check number, other details also. Take yes. Provide GST details, other details. Yes, here what is that? First one, name mode of payment. I am making payment by check. If it is debit card, credit card, or online net banking or NEFT, whatever it may be, we can pay any mode. So I am taking check, and the bank name is State Bank of India. Sorry, State Bank of India. State Bank of India, and these are all numbers related to the challans that will enter. This is the bank number, that is, there will be code for the bank for accepting GST payments. And then payment date is 27. Instrument means check number is 1, 2, 3, 4, 5, 6. Instrument date is also, it is paid on 2nd in the bank, but the check may be prepared on 1st also. So check date will be here. So 27, if it is prepared on 1st May, July you have to give, 2nd July, that's all. So being the composition tax paid. That's all. After this one, now you go and see here. Okay. Okay. Now we go and see the balance sheet. It will be as it is. So this is the plan. So 2047 Sunday creditors are the total sales. Sunday creditors. This is closing stock. Sunday debtors when you sell. Bank it is showing. Bank there is no balance, showing minus balance. Bank. Suppose there are some other entries that is showing current account asset is showing. Even the bank account is an asset. It is showing minus balance, it will be liability. So if there is no other entry, then it will show on the other side. So current assets, liability asset only, but it will show current assets this side, and bank account minus value to show here this side, because there is other entries that is not showing the other side. It is showing correctly. Okay, and here in the case of creditors, there is no duties and taxes, there is no input tax credit. So that is there. And you come here to the profit and loss account, Alt F1. Here, the CGST and HGST is payable for the sales of goods. The 1% we are paying, that is paid from our pocket. So it is taken. So it is taken. GST is created as for purchase also indirect taxes. So indirect taxes. That is why indirect tax is taken as indirect expenses, means in the profit and loss account on the debit side is showing. Okay, this is about the accounting entries in the books of the accounting entries for the composition dealer. So every month you will do like this. And here, in the case of this one, there is another problem. With the same example, its name is different, numbers are there. Check up the numbers, everything. Okay. And here, capital of 5 lakhs. Okay. Okay. So here you see the, remember this problem number 2. You stop this, pause this and see this, all the entries, all the transactions. Then go down. Then go to the next page. So do this one, and after stop this and see all these exam transactions, and then go to the balance. See, this problem is the same but with more transactions. You try this, it will be good. Okay, and this one you will feel difficulty. This one you will feel difficulty. This I will show you in the next video, or here itself we can show you here. This is a compound entry, or you can see, you first of all you make Sita, that is 1 lakh is paid to Sriram Tech, and 1,50,000 is paid to HP Tech, and the respectively means first one, the first number, second one is make 2 entries. But for this, compound entries can be made, just like making payment for any say expenses or to any persons. All the payments made to any person, the person account will be debited, and the expenses, all the expenses will be debited. All can be debited. Nature of transaction is same. Credit paid cash to all. So credit cash account. That's all. So debit, you can make all the entries, isn't it? That is similarly when you make payment through check also, for each one, we will not give the same check. For each one, we will give different checks. So in such a case, many people don't know how to make. So all the parties will be debited. Credit cash means cash is credited. But here credit bank account you have to credit. But in the bank there are two checks. How to make entry for two checks in one entry? How to show choose? That's why for each one they will make separate entry. Say Setaram, say Sriram Tech account debit, bank account credit. HP Tech account debit, bank account credit. So in there, first entry, this check number will be given. In the second entry, second number will be given. But we can make the entry. Both can be debited, and when a check amount, State Bank is credited, when you enter that, it will ask you the check. It will ask you two entries. So first of all, first one, it will ask you one. So give the first option, that is the details of the bank. In the first option, select, it will show the names. Select Sriram Tech, 1 lakh, and for that give the check number. Enter the second also, it will show the same name. Again, it will come down in the same window. Then second, you select HP. Second, it will show the check. So go back and give the HP Tech name HP Tech, and the check amount will be the balance out of 250. 150 is the balance, and 150 for this person. And in the check field, give this check, and for in these both the cases, will you the enter that. I will show you otherwise tomorrow. Okay, I will show you then. So this is about the accounting entries in the books of composition dealer. So this is the second problem. You do that. On the first example also, you try on your own, practice many times, and take some other example. You will have everything perfectly. You will know. So this is my idea is everyone has to get good knowledge, expert knowledge. Okay. With this, I close this session. Wish you all the best. Thank you. Bye. We will meet in the next video with some other important topic.